Well, markets mixed here today after both the S&P 500 and the Nasdaq hit fresh intraday record highs. We kick off the second half of the year. That happened this week, and you might want to rebalance your portfolio to stay on track. To discuss, let's bring in Keith Buchanan, Globalt Investments Senior Portfolio Manager, here with us. All right, so let's talk about this second half playbook here, Keith. Where are you seeing some rotation take place, and where are perhaps are investors leaning further in to their portfolio trade?
Thank you very much for having me. We're looking at the second half of this year as an opportunity, again, as you mentioned, to rebalance a bit. We've been really concentrating on large cap growth. We've been in a position now, constantly benefited from that positioning, but now we're looking to become a little more balanced as it's coming into this earnings season, which we think is critically important. Every earnings season is important, but this one is critically important to this bull market we're on because of the 10 largest names S&P 500 generate very large, disproportionate amount of the growth as well. So as those names have performed and have grown into those multiples, we feel like that's going to become more and more challenging into the second half of this year into 2025. So this earnings season is really going to be a barometer for where those 7 to 10 names or so will contribute to guidance and the S&P 500 earnings in 2024 and 2025 that have baked in a lot of growth, and a lot of that comes from those top largest names in the S&P 500.
Keith, it's been a hot NVIDIA year, could be a hot NVIDIA summer, who knows? I mean, as we're thinking about some of the specific overcrowded trades that investors have piled into, where are you anticipating that we could see a shift, at least in the mindset of where some investors who might have been talking about their own portfolio and trading strategy at the barbecue over the past couple of days are trying to figure out, okay, I've seen insiders taking some profits. Should I be taking profits too? How can investors know when it is the right time to take profits and reallocate them?
We've seen, large cap growth, technology, artificial intelligence oriented names just really make the market really top heavy. And we're looking at spaces outside of that. We've been positioned for that for some time now. But they're looking at spaces like the consumer, which is really driving, this market really kept us out of recession even for the last 4 years of, a turbulent market environment. The middle to high end consumers doing a little better than those on the ends. We feel like Costco actually is a name that benefits from that shift in spending that's remained more steady with the high and middle income earners as well. The financials, we feel like the steepening of the yield curve has really made those names prop up a bit over the last couple of weeks. Of course, we're coming into, when those names, the money center banks start to report, and we're positioned to benefit from some of that as well. So we're looking at financials, some names and consumer-driven names, a couple of industrials as well that might be oriented as value stocks. But we feel like our position to take the mantle of this bull market as the top 10 names, the Magnificent Seven, if you will, coming to some earnings stresses that might hamper those performances from those names going forward in the second half of this year.
Keith, what do you believe the prevailing theme for the earnings season that we're about to go into could be?
Is this growth real? The bottom-up expectation is for 9% growth in 2024. A large portion of that, the majority of that is coming in the second half of this year. Without the top 10 S&P 500 names, that growth is expected to be about 6%. So almost a little over a third of that is coming from just a few names. There will be a lot of attention on the Apples and NVIDIA and Microsofts of the world, and rightfully so, because if that earnings growth is 5 instead of 9, the multiple of the market completely changes. So there's a lot riding on this earnings season, particularly for those few names, as the S&P 500, again, has been priced for tremendous growth, frankly, over the second half of this year and next year. Whether we can fulfill that expectation is yet to be seen.
To what extent, just lastly while we have you, Keith, to what extent is the general election here in the U.S. a wrench in portfolios coming into what is expected to be another vitriolic type of event here in the U.S.?
Politics has been interwoven in market dynamics for some time now. We think this year is going to be one of those banner years where politics dictates the movements in fixed income and equity markets, particularly in the U.S. Also, from a currency standpoint, we've seen that change since the debate on Thursday in a pretty dramatic way. It's shifted very hard in a kind of a pro-Trump manner Friday and then some on Monday. That somewhat shifted back in this week that is really light, holiday week, so it's really hard to have any main takeaways. But as this second half wears on, we will see that become more and more a focus of the marketplace and those bets that are taking place and being placed, depending on the polls, will come to a head in November. I think down ballot as well, we see some shifts as far as where spending could be and what parts of the market can benefit from that. Also being an opportunity and potentially even a challenge for some parts of the equity market. Those bets, again, it's fairly early to place and really have hard takeaways from where we are right now politically. We kind of shy away from that until things come into more focus later in the fall. We think the earnings driver really was pushing markets back and forth, especially from a monetary policy standpoint as well. We saw the jobs report this morning, how that plays into what the Federal Reserve's reaction function may be and how that might change coming into the fall. We feel that's a more predominant dictator of the direction of the markets at this point.
Certainly. Keith Buchanan, Global Alt Investments Senior Portfolio Manager. Great to see you, Keith, and thanks so much for joining us today.
Thank you.